the rabbit hole goes even deeper, even after I did all this research. But hopefully for the newcomers, it's not too overwhelming, but it's just ask questions, but it's something to just be aware of in the coming years with this type of protocol and these type of projects. So this presentation is going to be about what is Curve and how it's connected to liquidity and exchanges and DEXs. All right. So first thing first is when I heard about the Curve project back in the early, was it 2020? It was not even early, it was just like 1.5 years. 2020, it came out in August 2020, if I'm correct. I don't know if that's right. But when I first saw it, I was like, oh, it looks like crap. It literally looks like crap. It looked like it was built in the 90s. It was from Windows 98 era. But the thing is that it was built like this on purpose, because the thing is that it's for highly technical crypto people that to actually want to get into this. And from, well, now I see its purpose. But at that time, if you were to see this, oh, this thing looks like shit, it's like, forget about it. But diving a little deep into it back then, I mean, they paid out certain yields, but the thing is, it wasn't that attractive until recently. Okay, so but the first thing to really understand with the Curve protocol is really understanding what liquidity is in an exchange, and just a decentralized exchange especially. So liquidity is the lifeblood of financial markets. Without liquidity, none of the stock market will work. Okay, so you need liquidity, which is basically buyers and sellers to be able to buy and sell whatever asset. Could be stocks, could be commodities, or anything, pretty much. eBay needs liquidity, right? You need buyers and sellers to buy and sell stuff. So once you understand this, then Curve makes a little more sense, okay? But so what we have here is just a depth chart for those not familiar with it. You see on all exchanges. Next thing is let's dive into Curve a little bit. What Curve is a unique AMM structure where it's based off a specific curve on a graph. I don't know the mathematical equation, how they figured it out, but it's something to do with the curve, hence why the project is called Curve. They were able to figure out how to reduce slippage when you buy and sell assets on a exchange compared to other competitive exchanges like Uniswap and SushiSwap and some other exchanges out there. So that's the niche that they really had. And besides, just being a DEX, what it was really known for in the beginning was trading like-kind assets. What that means is, so there's USDT and USDC. They're both stable coins. It should be $1 at all times. But the thing is that if you're a whale and you wanted to buy $10 billion of USDT, you would move the market. It wouldn't stay $1 anymore. It might be 98 cents. But then you're buying so much that the slippage, it causes you to lose money. So what Curve does is they figured out a way of reducing the slippage where it's close to $1 when you trade $1 to $1 assets, or in the case of Bitcoin, where you have wrapped Bitcoin on Ethereum, and you have other type of Bitcoin where it should always be one Bitcoin, but sometimes the balance might be off, and that's when there's not enough liquidity in the system. All right, so Curve, besides being a DEX, is also a DAO, meaning that their native token, Curve CRV, you could use it for voting rights, where you could redirect specific things that the protocol does behind the scenes. It's also a place for, like I said, big orders, mainly for whales since the beginning days of stablecoins. Okay. So now we dive into the token a little bit. So the native token for the Curve project is CRV. So by itself, it's kind of useless. What you have to kind of do to unlock its potential is you actually have to lock the Curve token, and it becomes VECRV, which stands for Vote Escrow CRV, meaning that now you get to vote on specific things that the protocol does on the back end, where certain liquidity goes, and if you wanted to get a certain amount of VECRV, you have to lock your CRV tokens for an X amount of time. So most people lock it for 4 years. Because you lock it for 4 years, you can't sell it, and because you can't sell it, there's a lot less CRV on the market over time. Okay. So VECRV. So supply is limited now because, yeah, as more people want to buy it, because they want to lock it for the rewards. Because the longer you lock it, you get staking boosts, you get increased payouts over time as a reward, and your vote counts greater as a governance vote, and you also earn more LP fees. So you lock it in a contract that they have on the back end. It's basically, you just say you're gonna lock it for 4 years, you can't touch it basically, but the thing is that you get all these extra benefits, which is the caveat there. Yeah, you could think of that too. So as more people lock it, there's less. It should technically increase in value depending on how this all plays out. You have to keep in mind, Curve is still very new. It came out in 2020, and it really just picked up last year. Hey, yeah, so so keep in mind, remember CRV, VECRV, because this is very vital to understanding how this all works, because it gets very confusing once you lose track of what tokens, what the name of the tokens are. So this presentation about the war, the Curve wars, right? So originally is a war for VECRV to get governance rights of where the money goes in the system. Originally in August 2020, Yearn Finance was another type of DeFi protocol, which is a yield aggregator, meaning you get to dump in your USDT or USDC, and then you'll earn interest over time. They want to grab more VECRV, and which they pretty much buy CRV and they lock it, and then that's when it kind of started with that U. And then move a little forward to April of 2021, just last year, Convex Finance is also part of the Curve ecosystem, where what they really innovated with the VECRV is that they tokenized it to the point where instead of locking it, they lock it for you, but then now you get to move it around. And that was a really big deal, okay? So these guys were the two big players for the past year or so. Okay, so next thing to really understand is the next thing, Curve, and then now you have Convex Finance, two separate projects, okay? So Convex relies on Curve. So they cannot, Convex cannot exist without Curve. So like I said, what they solved was when you lock your CRV for 4 years and you can't do anything, you can't send it to somebody, you can't sell it, you can't unstake it. Basically you take your CRV and you deposit it into Convex, and then it becomes VECRV permanently in the Convex system, but they give you a peg token, which is called CVX CRV. It could get a little, I know it's a little confusing. It took me a while to really get this down. But the CVX CRV is movable now. Now it's sellable. Now the locked stake of the 4-year CRV is movable. You can sell it. It has a value. Okay. And then from there, the CVX CRV, which is, I'm getting confused. Yeah, this is the unlocked VE CRV on Convex, which can move around. This on the Convex network, you get to lock it and get the same rewards as if you locked the original CRV on the Curve protocol. Now, because it's movable, and they also have a bonus reward of CVX tokens. Okay, there's another token. All right, it's the rabbit hole is insane. But I mean, obviously, you're not expected to get all of this tonight, but it's to lead you into doing a little more research yourself. So yeah, you still get your rewards. Convex holds the CRV that you deposited, but you still get the rewards. You still get the rewards. And as a bonus, you get the Convex token, which is the CVX token. So CVX is not pegged to anything. It's the native token for Convex Finance, which when you stake the bonus, you get the CVX for free when you stake CRV, and then you get the stake CVX again. Now you get the double stake, and then now you also earn CVX CRV, which is the original CRV. It's a loop, okay, and then you get even more rewards. It's just insane the way it works. But Convex as a system itself, it earns money, and then you get a share of that profit as a Convex holder. When they stake your CRV, they're making some money from it somehow. I'm not exactly sure how. I don't know the bits and pieces of it, but it's something to do with like you get rewards of rewards of rewards. Yeah, it's just it's very confusing. I mean, whoever is a veteran Curve user, they might know better than I do. But it's I said the tip of the iceberg here. So once you have the Convex token CVX, you also get voting rights again. This time on the Convex network. This is to direct liquidity on the Curve protocol that Convex controls. Might be a little confusing, okay? So originally the battle for the Curve wars was on Curve, but in the past year, it has moved to the Convex system. So DAOs, which is decentralized autonomous organizations, they have started accruing more Convex CVX tokens to get a share of the pie to figure out where the Curve rewards go. So the top holders of the CVX token is currently Frax, Redacted, and Olympus Badger. These are like DeFi plays. All right, so they're trying to acquire more and more of this. So the next thing at play, besides the war is being held on Convex Finance for CVX, the next thing to tack on top of it is that now they're bribing users, regular people like us, right? Where you just maybe have $100 or $1,000 of CVX, where they say, okay, I'm going to buy your governance votes. Vote for my pool to get more liquidity in my pool for my specific project. So Convex was the original project to really kind of push that forward, where they bribed DECRV holders, which is the original Curve holders, to vote for Convex. All right, so they did a 1% airdrop, and then from there, then on, other projects started following. Okay, we'll get back. So we got Phantom, also bribing its users. They was willing to give out $100,000 just to get your vote. Okay, like obviously it's split among whoever does the voting, right? And then you got Cream Finance, and you got Abracadabra, which is known for the Magic Internet Money, which is the stable coin. So they're bribing regular users to vote. Okay, these bribes is extra profit on top of your rewards that you're already getting on Curve. Okay, all right. Maybe well, people are fighting to be monopolies, right? Companies are trying to bribe users to vote for their protocols. So voting happens every 2 weeks, and it has been going on since I think September or something like that. I'm not sure exactly, but total bribes that have been given out so far is $13 million. So that's a lot of free money where all you do is just voting for the pools, and they would just give you like their token, like Frax token, USDT, which is Luna, and then you got a whole bunch of other projects which is trying to get a share of the pie, of the Convex pie. All right. So as you can see in this graph, just remember that it's still a curve war, but it's just on the Convex network now. And so tracking Convex CVX tokens owned by DAOs has been constantly increasing since September of last year. So they're constantly buying. We don't know what's going to happen in the coming year or two, but it's most likely going to increase. Okay. So what does this actually mean is that what we're witnessing is a network flywheel happening. Right? So like how the rewards get dropped to users, and then they lock it for 4 years. You deposit into Convex Finance, and then they lock it again, and then you get it, and then it just keeps going in a circle, right? So this flywheel just keeps on cycling. The price should technically go up, but obviously things are different, right? With this crypto winter. But the thing is that what we have here is something that's never kind of been seen before, where you get all these crazy rewards just out of nowhere, and users are just lured by projects that just drop this stuff out. Okay. So keep in mind that the Curve war is still mostly on the Curve decentralized DEX. It's still in the Curve ecosystem. It's moving liquidity around the background. But the thing is that if you wanted to drive liquidity to other exchanges like Uniswap, SushiSwap, PancakeSwap, all these other DEXs, there isn't really a system for that yet. So supposedly a liquidity war is coming. So, which is the Tokemak, which is another project which recently launched in like November of last year. Still very new project. It could be vaporware, who knows? But the thing is that what they're solving is a very big deal, where you can move liquidity around different exchanges now, where they basically built a liquidity as a service product. And that's a very big deal. You wanted to, as a company, to move like maybe $10 million into your pool. You could rent it kind of in a way, and they figured out and solved impermanent loss, which is a huge deal for you guys that play with LPs. And then the next thing with the bribes, which I discussed previously. So bribing, I mean, this has always been around, bribing, but the thing is that I guess it's really picking up steam with all this Curve War and all this other stuff in DeFi. So this project hasn't even been released yet. It's called the Hidden Hand Marketplace. So it's a marketplace specifically for VE type token, vote escrow tokens, where you lock your tokens and you just vote on stuff, right? So it's a marketplace where they pay you to vote on specific things. Let's say, example, maybe you got paid $100 if you voted for Biden or Trump or something like that, right? So you would get paid to do certain things, right? You get incentivized. Yeah, it's called Hidden Hand, which it explains it. It's a really good name for the project. Yeah. So conclusion of all of this is these applications, they solve the liquidity problem. And 5 to 10 years from now, it doesn't matter what popular blockchain is going to be, either Ethereum or Bitcoin or whatever is going to have, popularity, it could be Solana or whatever, right? But the thing is that they will change, but at the end of the day, they all need liquidity. There's going to be exchanges, and they all need people buying and selling stuff. Doesn't matter what it is, but it's the fact that they need liquidity, and it's good to look for projects that are blockchain agnostic, which it doesn't matter what popular blockchain is going to be. The application still works, which Curve clearly does, because there are multiple blockchains, because the future is currently going to be multi-chain. It's not just going to be Ethereum. So you're going to get your maximalists, where obviously got a big bag of Ethereum. That's why they're maximalists about Ethereum. But the thing is that it's going to be multiple chains in the future, and it's good to be in projects that are agnostic and they don't care what's going to be popular. And I believe the liquidity play is going to be a huge thing. All right. So that is the Curve protocol wars. So guys, free to discuss or ask me any questions about. Ken here has played with it, right? Yeah, I have.